afternoon, financial professionals. I am Steve Walker, Vice President of Institutional Accounts at E4 Insurance Services, welcoming you to the Brew, building relationships every week. Thanks for tuning in today. For those of you joining the Brew for the first time, welcome. We'd like to start the Brewcast by celebrating today's national days. For today, we've got National Cousins Day, National Tequila Day, and finally National Drive-Through Day. So, as you know, some like to tie those three together. On National Cousins Day, you can enjoy a tequila after you go through the drive-through. But excited for those. On today's Brew, we will continue our July Focus Planning Series with John Hancock's Regional Vice President, Matt Fitzpatrick, to learn about an innovative way business owners can help recruit and retain their best employees. We'll discuss John Hancock's Premier Benefit IUL program, which offers simplified underwriting for indexed universal life with a long-term care rider. We encourage you to use the chat box or raise your hand to ask questions. All attendees are entered into a drawing for a CE voucher and Starbucks gift card, and we'll announce the winner at the end. So we thank you for tuning in, and Matt, thanks for joining us today. Excited for you to be with our group and really talk about this exciting Premier Benefit IUL program. So I'm going to turn it over to you and let you take it and run.
Awesome, thank you, Stephen. Thanks everyone that joined. Excited to be here. And really excited to kind of talk about this new offering that we've been expanding into. We historically at John Hancock have not been in the simplified issue, guaranteed issue space. And so, but we definitely saw that there was a need out there for this. And we're excited to kind of start dipping our toe in here. We launched this offering last fall, and we're continuing to expand with some additional offerings as well. So just to kind of set the picture for us here and make sure we're all on the same page, talking about the problem that we're trying to solve with this Premier Benefit Indexed UL offering. I think it's no secret to the folks on the call that employee turnover can be very costly for a business and a company. It takes quite a bit of investment, both in time, in resources, and money to get that person on board, up and running, and actually sort of contributing back and entering that kind of what you can see on the slide is that return zone where you're finally, as a business and a company, getting the return on your investment for the time, money and resources that you invested in that employee. I think it's one thing to talk about employee turnover being costly as a generality, but it's, I think, another to talk about it in numbers. And one kind of statistic that I want to throw to the group is one that we cited as part of this material from the Center for American Progress, where they cited 11 research papers done over a 15-year period and found that for a highly skilled worker, the average cost to replace them was about 213% 1 year's compensation. So almost over double what they would pay that employee in a given year. That's how much it costs to replace them. So again, it can be very costly for these companies to have to replace these highly skilled workers. On the flip side of it, again, there's the tangibles, the cost to hire, the onboarding, the lost productivity. I always like to remind folks about maybe some of the more intangibles or harder to measure aspects of employee turnover. There's kind of that cultural impact, you might think of it, right? I always kind of think of it as like the sort of quote unquote water cooler conversation, where when folks see other people in the group leaving and going elsewhere, they might think to themselves, oh, what did they not like here? Or what do they know that I don't know? And what is there something better out there? And then you reach a really bad point if you have, high turnover within a company, and then sort of the folks that are left there can really start to become disengaged. So again, there's both sort of more tangible and intangible aspects to employee turnover. Compounding this problem is the fact that, okay, it's costly to replace highly skilled workers, but you also might have a hard time being able to replace them, period, regardless of the cost. So again, citing some more, reference material here, this is from the U.S. Chamber of Commerce, done in July 2023, but they found in their labor force study that there is definitely a number of industries that are facing pretty significant labor force shortages out there. And in particular, you see it circled there, financial services and some other professional and business services are especially impacted by this labor force shortage. That can be accountants, attorneys, you name it. And by some groups, it's estimated that by the year 2030, the US could be facing a deficit of more than 6 million skilled workers. So I think we've kind of, painted the problem here that a business and a company can face. So what's the solution? We typically find that employers want to create the ability to have loyalty within their company. They want to create retention programs that avoid turnover. And even more than that, from a more proactive standpoint, they want to create the impression that their company is good to work for, that there's a lot of benefits and it's a good place to work. And that can help with talent acquisition, especially if they're planning to expand. They typically want these to be fairly selective group offerings. They don't necessarily want to offer this to every rank and file employee. And that kind of leads us into the third piece of this inverted pyramid, which is cost effective. Typically, if a company wants to keep something cost effective, they want to keep it a little selective because, again, it's sort of intuitive that if you're offering it to everyone, the chances that you're going to get the most bang for your buck and it's going to be cost effective start going down. The good news here, too, in terms of a solution, is that when surveyed, we find that there's a lot of overlap between what employees and employers think are the best and most desired benefit offerings that they can provide and that employees want. And so you see number 2 here from a Forbes Advisor survey done in 2023, life insurance actually ranked number 2 in terms of what the top benefits employees wanted from employers. So again, we're kind of building the picture here. There's a need, there's a solution, and it's something that folks out there are saying that they want from their employer. So how does life insurance fit into the conversation of creating these retention programs for employees within a company? I think it's, just to kind of level set, we can think of these in 3 separate buckets. We've got stuff that maybe you're a little more familiar with, which is like the non-qualified deferred compensation plans that can be either employer owned or employee owned, things like salary deferral plans, SERPs, 162 bonus plans, REBAs. But what we're going to focus on with this offering, Premier Benefit Indexed UL, is the voluntary benefit space. That's where the employer is simply offering this benefit and it's employee owned and paid for, usually by a payroll deduction, but we do with this offering have the opportunity to do direct bill as well. I want to kind of address a common, question I might get, which is, hey, Matt, you just talked about the fact that this is supposed to be an employee retention tool, but you're also telling me that this offering under voluntary benefits is something that right from the get-go is owned and paid for by the employee. I think that a lot of us that are in the industry and we know the sort of inner workings of the industry, we know the mechanics of the products, we might feel a little bit like that. But I think to the average consumer out there, if they're able to get life with long-term care on a very much simplified issue basis, no records, no exams, and a much better application process than they would otherwise be able to out in the retail market, I still feel like there is a sort of halo effect, and they do still attribute that benefit to the employer and something that the employer gave. Thinking about these 3 buckets, making a quick plug, we at John Hancock have options for a number of these. We do have guaranteed issue options with non-qualified deferred comp, SERPs, and salary deferrals. Some of the other non-qualified deferred comp plans that we talked about, 162 bonus, we have retail products, traditional underwriting, some express, underwriting opportunities there. But again, in the voluntary benefit space with Premier Benefit IUL, what they're getting is simplified issue basis usually. There is an option to do guaranteed issue if you have 200 or more eligible employees, but you don't get the long-term care piece with it. And we do feel like the real hook with this offering to the average consumer and the average employee that this might be presented to is that long-term care piece. So you kind of have a trifecta here. For the employer, this gives them a cost-effective way to provide additional coverage that goes above and beyond the group term coverage that might be offered to all employees. And for the employee, they get permanent portable life insurance protection with all the tax-free death benefits and long-term care offerings you might expect. And they also get from us our health and wellness program, Vitality, which not only can provide a lot of cost savings within the policy, but really can provide some value add to the actual employee in their own lives to help them live a longer, healthier life. One of the things we like to point out to folks is that with the Vitality offering as part of this product, there are a number of studies done that show that corporate wellness programs can have a really great effect on an employee base. It can result in lower absenteeism from the employees, lower medical costs, and higher productivity. Most companies, especially the ones that we might be talking about approaching for this offering, they are probably not at the size and scale to have the resources to be able to afford to implement a corporate wellness program. They can be, somewhat costly. We'd like to point out to folks that when you're doing something like this as part of your employee retention program with voluntary benefits and premier benefit IUL, you're kind of killing two birds with one stone, where you're already building in essentially for free to the company a corporate wellness program because of the platform that Vitality brings in giving tools and resources to folks to live longer, healthier lives. On the inverse of this, speaking to the long-term care problem, we see that if you have an employee base that has to be an informal caregiver, we see a lot of the inverse factors coming in: higher employee absenteeism, higher incidences of durations of leave, and lower productivity. And we find that, a lot of employees do, in some situations, have to act as informal caregivers if they didn't have the right coverage in place for their loved ones. So again, we're addressing multiple problems at the same time here. Painting a little bit of a picture for you in terms of what types of groups we're looking for. We are looking for 10 or more high-earning professionals. Usually the way these conversations start is we get a census from you as the advisor or producer, and we kind of just talk through who would fall into the category of an eligible employee here for the group purposes. We're looking for ages 20 to 65, typically trying to target an average age of 60 or younger. We are looking for a base salary of $100,000 or more, although I can tell you that on a case-by-case basis, depending on where this group might be located, we may be able to look at lower amounts for cost of living adjustments and things like that. We are looking for full-time workers. Obviously, as part of a simplified issue process, there is a 10 to 15-minute digital application, so they'll be screened for any sort of major known impairments or substandard risks. And, no foreign residents would be eligible at this time.
Hey, Matt, real quick on that one, just because I know you mentioned the income limit of the 100,000, and it says base salary. Can you confirm, let's say somebody has a lower base salary, but they can show, 2, 3, 4 or more consecutive years of bonus and commission income where their total income is over that threshold, but their quote unquote base salary is lower? How does that play in throughout here?
Yep. So, guidelines are guidelines for a reason. They're meant to be stretched. And yes, if you do have folks that are in primarily a sales position or something that, gives them variable income, we can look at that on a case by case basis. And, whether that's averaging the past, like you said, 3 to 4 years of variable compensation income, or, at the very least to be using that to lower what we would be looking for their base salary to be. That is definitely something that, that when we work through the census with you and the advisor and the company, that those are the types of conversations we can have. Absolutely.
Awesome.
So kind of just giving you a flavor for the mechanics of the product, this very almost identically mirrors our retail protection indexed UL chassis, right? Pretty much the same mechanics and features. It is part of the simplified issue streamlined process. So we do kind of skinny down the risk classes offered: preferred, standard, or smoker. It is an index product, but we really simplify the options for you to, again, make it very simple. So it's just a bare bones base capped indexed account, S&P 500 indexed account option, currently at a 9 3/4 cap, and all the things that you would expect from an account like that: guaranteed 100% participation, 0% floor, and no index performance charges or multipliers. Again, keeping it really streamlined. You can kind of just see from the comparison grid here, male preferred, $1 million, 4% long-term care rider. Again, they get a truly retail priced product for a simplified issue process, and you can see that when you compare the two in this scenario. Almost identical premiums. Targets are pretty much on track. Cash value at age 65 is actually a little higher in the Premier Benefit IUL, similar no lapse guarantee periods. And again, the thing that I mentioned, I think is really going to be a hook to the average consumer and employee, that robust long-term care coverage that they can get through this offering. This is just a grid of what we expect for the participation rates. We'll send this material out after the call, so you can have this in front of you. The one point I want to make here is to really point out how flexible the definition is for these participation rates. You'll notice at the bottom it says participation rate defined as completing it and submitting an application. So all you need to do, so say you have a group of 10 folks, eligible employees, you just need to get 5 of them to just take 10 to 15 minutes to complete a digital application. And that is a check the box. If they happen to not make it through the process and don't qualify for the coverage, that is okay. If they don't end up taking the coverage, that's okay too. So you can end up with, very few employees that actually take it. So I just say that to say, don't be afraid because you think you need to have so many folks that are going to purchase it. These are pretty flexible guidelines in terms of participation rates. And lastly, I'll just leave you with this. Typically groups that this has resonated with: professional services firms, lawyers, accountants, doctors, those smaller businesses, 10 to 100 eligible employees. And again, this is not going to be replacing their shelf voluntary offerings. It's something that for, these higher skilled workers making a little bit more of a significant income, we can expand this beyond just the C-suite or the partners that we find with most non-qualified deferred comp plans. And we can offer this to them, again, for retail cost in a much simplified process. So I'll leave it there, but happy to take any questions or discuss further.
Awesome. Well, thank you very much, Matt. And if anybody does have any questions, feel free to come off of mute or put it in the chat box. And one thing I think can't go understated, and I didn't honestly believe you the first time when you and I were talking about this, Matt. I had to question you probably 2, 3, 12 times, was that participation limit. And again, you see that 50% participation, which is not uncommon, because I know we do have a number of benefits advisors and executive benefits advisors that are either on the call today or going to be listening. When you hear participation, that's applying and accepting. The fact that it is applying, regardless of if you get approved, regardless of if you accept the policy, I think that is a true game changer, and really shows, John Hancock's commitment to this space, which I'm excited about. And I think really our advisors have a ton of opportunities when you can offer a simplified issue product with a top shelf life insurance company of John Hancock with a great product, and you have that long-term care rider for a 10 to 15 minute e-application that's simplified issue. I think it's a absolute no-brainer for some of these companies to be offering it, because again, the employee's paying it. They're going to decide if they want to take it. And most of our advisors are telling us here at E4, their clients just aren't having that long-term care conversation. Would you agree, Matt, in your in your role? Are you hearing the same thing, where that long-term care and being able, that's, like you said, that's the secret sauce here?
I think the average consumer out there isn't necessarily walking around every day thinking, oh, I need to have more life insurance. I do think because of how prevalent long-term care needs are, the aging population, I do think the average consumer is walking around knowing someone that has a long-term care event and having to be an informal caregiver, or at least knowing someone that has dealt with a family member. So that, again, that I think is the piece that sort of sells itself and resonates, is the long-term care piece. Absolutely.
I would agree. And a question that came into the chat box, and I'll phrase this to you, Matt. Is there any competition on the long-term care side compared to the Premier Benefit IUL through John Hancock? Who would you say is kind of competing in that space?
According to our competition and intelligence group, there is something, I think it's TrueMark. I have materials I can send to you to share with the group after. I think it's something called TrueMark or TrustMark or something. They operate in this space where, it's a simplified or streamlined process with a life and long-term care chassis. The problem with them is on a per, dollar coverage basis, it is much more expensive than our offering, and their maximums are so limited. So I think they're tapped out usually at like 200,000, whereas like we can go up to like $1 million on the long-term care pool. So that is where I think they're at a disadvantage. And again, it's much more costly to have their offering that actually maintains its death benefit and long-term care pool all the way through the client's later years. Otherwise, you get this weird, like at age 70, it drops to 50% of the original amount. And it's like, well, those are the ages that they're most likely to need it. So I don't know why that makes sense. Again, I'm obviously biased, but we do have a slide on that I just kind of cut from the material today. But I will, I'll send it to you to share with the group after. That's the most analogous thing that we know of out in the market.
Yeah, I would agree. And again, I've seen some competitors, and I would agree 100%. The pricing is great, but again, the pricing is, if somebody wants it, they're gonna certainly pay. And John Hancock is very competitive, and I would agree, priced better. But the bigger thing is, you hit the nail on the head. When you're going to need long-term care the most, you want that pool to be what it started at. You don't want it dropping at a certain age, which I think is really a game changer.
Absolutely.
So while we wait for any final questions, I'd like to remind you that today's brew and our full library of brews are recorded and shared on our Blue Brew blog on our website, www.e4.insurance. Today's recording will be posted on the Brew blog and emailed out later today. So while we wait for any final questions that might come, somebody coming off of mute or additional going into the chat, maybe go to our giveaway, Matt, and I'm going to ask you to reach into your virtual top hat and pick out a number between 1 and 27.
17.
17, great choice. That is my birthday day of the month. So number 17, our winner today is Jordan. Congratulations, Jordan. Be on the lookout for a complimentary CE voucher and Starbucks gift card that will be coming your way from all of us here at E4 Insurance Services. Any other final questions from the group? I see we have a comment. Very cool product. I would agree, Grant. I would agree, Grant. We'll find a good opportunity to present it to. So, well, thank you everybody for your time. On next week's brew, Phil Haug, Senior Vice President of Sales, he and I will close out July's focused planning series on worksite and voluntary guaranteed issues with a case study and ideal client discussion. You want to make sure to attend as we close out our focused planning series month here on those products. Matt, any final comments or questions or final thoughts before we close out for the day?
I would just encourage the group again. This conversation all starts with a census. So I just feel like, anyone that you think this is applicable for, don't, pre-count any group out in your mind. I've seen the folks in the powers that be at home office make some, accommodations for certain groups and stuff. So please, just any group you have, don't be shy to send us a census, and that's how it starts. We'll talk through it and go from there.
That sounds great. Like you said, you don't want to lead with the solution. You got to diagnose the problem and find the goal before you go to it. So I thank everybody. Thank you, Matt. Thank you for everybody joining us today, and we will see you next week on The Brew.